One man controlled every dollar in circulation in America. He decided which businesses got loans and which ones failed. He could trigger economic booms or financial panics with a single decision. His bank held more power than the federal government itself. Nicholas Biddle managed $35 million in capital, roughly $1 billion today, but his real power came from something else. He controlled the money supply. While other banks could only lend what they had, Biddle's institution could create money, literally manufacture it into existence. For 13 years, he was the most powerful man in America who wasn't president. And then, in the most public, brutal, and complete political destruction in American history, he lost everything. Here's the number that matters: 35 states. That's how many legislatures eventually condemned Biddle after his downfall. Not criticized, condemned. They passed formal resolutions declaring him a threat to democracy. His own state of Pennsylvania charged him with fraud. His bank collapsed spectacularly, taking thousands of depositors' savings with it. But what nobody talks about is how right he was. Biddle warned that destroying the bank would trigger financial chaos. He predicted bank failures, currency instability, and economic crisis. He was right about all of it, and he was still destroyed. The man who opposed him, Andrew Jackson, a frontier general who barely understood economics, who believed all banks were corrupt, and who thought paper money was a fraud. Jackson had no plan for what would replace the bank. He just knew he hated it, and the elite who ran it. Their war wasn't just about banking policy. It was about something deeper. Who gets to control America's money? Educated experts who understand finance, or elected politicians who represent voters? That question never got answered. Instead, we got a brutal spectacle. Jackson attacked Biddle as an aristocratic tyrant. Biddle fought back by deliberately crashing the economy to prove his bank was necessary. Both men put their egos above the nation's welfare. The result: the worst financial crisis in American history up to that point. Banks failed. Businesses collapsed. People lost everything. And Nicholas Biddle, who'd entered the conflict as financial royalty, ended it as a broken, publicly humiliated criminal defendant. This is the story of how America's most powerful banker learned that in a democracy, being right doesn't matter if you've made the wrong enemy. By 1832, the Second Bank of the United States stood as America's dominant financial institution. Located in Philadelphia, housed in a Greek Revival building designed to project permanence and authority, it operated 29 branches across the nation. The bank held $35 million in capital, employed hundreds of staff, and its banknotes circulated as the country's most trusted currency. Nicholas Biddle ran this empire from his office on Chestnut Street. At 46 years old, he'd achieved something extraordinary: near universal respect from America's financial community. Bankers in New York, Boston, and New Orleans deferred to his judgment. European investors trusted his management. Even his critics acknowledged his brilliance. What most people don't know is that the bank wasn't a government agency. It was a private corporation chartered by Congress. The federal government owned 20% of shares and appointed 5 of 25 directors, but the rest belonged to private investors, many of them foreign. This hybrid structure, part public, part private, would become Biddle's greatest vulnerability. Behind the bank's success was a simple mechanism that gave Biddle enormous power. The federal government deposited all its revenue, customs duties, land sales, tax collections, into the bank. This gave Biddle's institution a massive, stable capital base. He could then lend this money to state banks, businesses, and individuals at interest. But the real power came from something else. The bank issued its own banknotes, paper currency printed by the bank and redeemable in gold or silver. Because everyone trusted these notes, they circulated as money throughout the country. Biddle essentially controlled the money supply. When Biddle wanted to expand the economy, he'd issue more notes and extend more credit. When he wanted to slow things down, prevent inflation or speculation, he'd contract credit and demand repayment. No other institution had this capability. Not Congress, not the president, only Nicholas Biddle. Let me take you back to how this arrangement emerged. The first Bank of the United States had operated from 1791 to 1811, established by Alexander Hamilton. When its charter expired, Congress declined to renew it, influenced by Jeffersonian Republicans who distrusted centralized financial power. The War of 1812 proved they'd made a mistake. Without a central bank, The government struggled to finance the war. State banks issued their own currencies, creating chaos. Some notes traded at face value, others at discounts. Some became worthless. The economic disorganization nearly lost the war. In 1816, Congress chartered the Second Bank of the United States with a 20-year term. The early years were rocky. The first president, William Jones, managed poorly, allowing excessive speculation that contributed to the Panic of 1819. When that financial crisis hit, Americans lost jobs, farms, and businesses. The bank got blamed. Langdon Cheves replaced Jones and stabilized the institution through aggressive contraction, calling in loans, demanding repayment, restricting credit. This restored the bank's finances but made it intensely unpopular. People remembered the pain of foreclosures and bankruptcies. Nicholas Biddle became president in 1823, inheriting this troubled legacy. His challenge was making the bank both profitable and popular, two goals that often conflicted. Biddle came from Philadelphia aristocracy. His father had been a successful merchant and Pennsylvania politician. Young Nicholas attended the University of Pennsylvania at age 10, not because he was extraordinarily gifted, but because colleges then admitted anyone who could handle the Latin entrance exam. He graduated at 13, studied law, and entered politics. He'd served as a diplomat in Europe, edited a literary journal, and served in the Pennsylvania legislature before taking the bank presidency. He was cultured, educated, and supremely confident. He wrote poetry. He collected art. He corresponded with intellectuals across America and Europe. You see, Biddle genuinely believed he was serving the public interest. He saw himself as a technocrat who applied scientific principles to money management. He thought central banking was too complex and important to be subject to popular whims or political interference. This belief would destroy him. From 1823 to 1829, Biddle ran the bank brilliantly. He maintained stable currency, provided reliable credit, and prevented the boom-bust cycles that had plagued earlier periods. He acted as lender of last resort when financial panics threatened. He even used the bank's resources to smooth out seasonal fluctuations in credit availability. The results were impressive. The American economy grew steadily. Business expanded. International trade flourished. Even the bank's critics had to admit it functioned well. But underneath this success, tensions were building. Western farmers resented the bank's tight credit policies. State bankers hated competing with an institution that had federal backing. Politicians saw the bank as an unelected power center that didn't answer to voters. Andrew Jackson represented all these resentments. Elected president in 1828, Jackson came from Tennessee frontier culture. He'd been orphaned young, fought in the Revolutionary War as a teenager, and built a career through military service and land speculation. He'd lost money in financial panics. He'd watched friends destroyed by debt. Jackson genuinely believed banks, especially the big one in Philadelphia, were engines of corruption that enriched elites at ordinary people's expense. He saw the bank as a hydra of corruption, and Biddle as an aristocratic tyrant. Biddle thought Jackson was an ignorant demagogue who didn't understand economics. Jackson thought Biddle was an unelected dictator who threatened democracy. Both men were partly right. Neither would compromise. The bank's charter would expire in 1836. Biddle needed congressional renewal. Jackson wanted the bank destroyed. Between them stood the question that would define American finance for the next century. Who controls the money? Nicholas Biddle was born in Philadelphia on January 8, 1786, into everything Andrew Jackson would later despise: old money, political connections, inherited status, educational privilege. The Biddle family traced its American roots to the 1680s. They'd accumulated wealth through merchant trading, survived the Revolution on the winning side, and established themselves among Philadelphia's first families. The house where Nicholas grew up stood on 3rd Street, a substantial brick townhouse that announced prosperity without vulgarity. This was important in Philadelphia society. Wealth was acceptable, but ostentation was not. The Biddles understood the distinction. Charles Biddle, Nicholas's father, served in the Pennsylvania state legislature and ran a successful merchant house. He moved in circles that included Benjamin Franklin's associates, founding father's relatives, and the financial elite who'd built the young nation's economy. Politics and business weren't separate worlds. They were the same world approached from different angles. Young Nicholas absorbed this environment. By age 7, he could read Latin and Greek, not because he was particularly extraordinary, but because children in elite families learned classical languages the way other children learned trades. Education marked class boundaries. Here's what's interesting about Biddle's childhood. He never experienced financial insecurity. He never wondered where the next meal came from. He never saw his family lose status or wealth. This background shaped everything about how he'd later understand banking and economics. To Biddle, the financial system was a technical mechanism that smart people managed for everyone's benefit. Money wasn't personal or emotional. It was arithmetic. Credit wasn't about power dynamics. It was about efficient capital allocation. These assumptions made perfect sense if you'd never been on the wrong end of debt collection. The University of Pennsylvania admitted him at age 10 in 1796. The curriculum focused on classical languages, rhetoric, and moral philosophy. Mathematics received limited attention. Economics as a distinct field barely existed. Students learned through rote memorization and disputation, arguing assigned positions regardless of personal belief. Biddle excelled. He graduated at 13, which sounds remarkable until you understand that American colleges then functioned more like advanced secondary schools. A degree signaled social status more than intellectual achievement. His family sent him to Princeton, the College of New Jersey, for additional education. He graduated there in 1801, at age 15, delivering a commencement address that demonstrated his rhetorical training. The speech's topic? The balance between order and liberty in Republican government. He'd argue both sides of that question for the rest of his life. But here's the thing about Biddle's education. It taught him everything except humility. He studied history's greatest philosophers and statesmen. He learned to construct elegant arguments. He developed supreme confidence in his intellectual abilities, but he never learned to question whether smart people might be wrong or whether technical expertise deserved political power. After college, he studied law briefly, found it boring, and secured a position as secretary to John Armstrong, the U.S. minister to France. This was 1804. Napoleon dominated Europe. France was the center of culture, power, and revolutionary ferment. For a 19-year-old American aristocrat, Paris was intoxicating. Biddle stayed 2 years, observing European politics, collecting art, and developing the cosmopolitan perspective that would later make Western Americans distrust him. He learned French fluently. He visited museums, attended salons, and corresponded with intellectuals. He came to see America as a provincial outpost of European civilization, rather than as something genuinely new. When he returned to Philadelphia in 1807, he edited the Portfolio, a literary magazine that published essays, poetry, and political commentary. The work suited his temperament, exercising authority through elegant prose, shaping public opinion, associating with other educated gentlemen. The Portfolio didn't make money. It didn't need to. Biddle had family wealth. The magazine enhanced his reputation among people who mattered, Philadelphia's intellectual and political elite. That was sufficient purpose. Think about what this meant. By his mid-20s, Biddle had never held a real job, never worried about money, never experienced failure. He traveled Europe, edited a prestigious journal, and moved comfortably among America's elite. Life had confirmed his sense of natural superiority. In 1811, he married Jane Craig, daughter of a wealthy Pennsylvania family. The union connected two elite lineages, produced children, and provided the domestic stability that respectable gentlemen required. The marriage appears to have been affectionate, but not passionate, appropriate for their class and era. Biddle entered politics in 1810, winning election to the Pennsylvania House of Representatives. He served 4 years, focusing on education and cultural issues rather than partisan combat. He sponsored legislation to improve Pennsylvania's public schools, supported internal improvements like roads and canals, and generally represented moderate, pro-development Federalist perspectives. When the Federalist Party collapsed after the War of 1812, Biddle transitioned smoothly into the amorphous coalition that would become the Whig Party. His politics weren't ideological, they were technocratic. He believed in competent government administration, economic development through infrastructure investment, and cultural refinement through education. These views aligned perfectly with the Bank of the United States' mission. The bank would provide stable currency, efficient credit allocation, and predictable financial conditions that allowed commerce to flourish. What could be more reasonable? President Monroe appointed Biddle as a government director of the bank in 1819. This was both recognition of Biddle's abilities and a strategic move. Monroe wanted competent oversight after William Jones's mismanagement. Biddle studied the bank's operations intensely. He learned how banks created money through fractional reserve lending. He understood how the bank could influence state banks by presenting their notes for redemption. He grasped the connection between money supply and economic activity. What he learned convinced him that central banking was a science requiring expert management. Political interference would only disrupt the technical mechanisms that kept the system stable. The bank president should be independent, like a ship's captain navigating by instruments rather than passenger opinions. When Biddle became bank president in 1823, he brought this technocratic vision to the role. He'd use his expertise to manage the economy scientifically. He'd keep politics out of banking. He proved that enlightened elite management could serve the public interest better than democratic control. This was his fatal miscalculation. He never understood that in a democracy, technical correctness doesn't grant political legitimacy. He never grasped that people might rationally prefer democratic control over expert management, even if experts produced better results. Biddle's entire background had taught him that smart people deserve power. His education confirmed it. His social circle reinforced it. His experience validated it. He'd never encountered the perspective of people who'd been foreclosed on by banks, ruined by credit contractions, or excluded from opportunities because they lacked connections. To Biddle, Andrew Jackson represented ignorance attacking expertise, demagogues misleading the masses, and dangerous populism threatening rational order. He never considered that Jackson might represent something legitimate, democratic accountability challenging unelected power. This failure of imagination would cost Biddle everything. The building itself told you everything about Nicholas Biddle's ambitions. In 1824, he commissioned architect William Strickland to design a new headquarters for the Second Bank of the United States. The result was a Greek Revival temple that dominated Philadelphia's Chestnut Street. 8 marble columns, each 30 feet tall, supported a massive pediment carved with allegorical figures. The facade stretched 161 feet across. Marble stairs led to bronze doors that opened into a grand banking hall with 40-foot ceilings. Natural light flooded through clerestory windows. The acoustic design allowed conversations to remain private despite the open space. Biddle wanted the bank to look permanent, eternal, beyond political challenge. Greek architecture signaled that the bank represented timeless principles rather than temporary political arrangements. This wasn't just a building. It was a statement about the proper relationship between financial expertise and democratic politics. The statement was clear: we're above politics. Inside this temple, Biddle built something unprecedented in American history, a financial system that actually worked. Between 1823 and 1833, the bank operated with extraordinary effectiveness. Let me show you how Biddle's system functioned and why it threatened Andrew Jackson so deeply. The bank held approximately $35 million in capital, $7 million from the federal government, the rest from private investors. This capital base allowed the bank to issue banknotes that circulated as currency. The typical ratio was about 3 to 1. For every dollar in capital, the bank could issue $3 in notes. But the real power came from the federal deposits. The Treasury kept all government money in the bank. This gave Biddle's institution a massive, stable deposit base. He could lend these funds at interest, earning profit while providing liquidity to the economy. State banks issued their own notes, but faced a crucial constraint. The second bank could present these notes for redemption in gold or silver at any time. If a state bank overissued notes and couldn't redeem them, it faced bankruptcy. This gave Biddle enormous leverage. When he thought state banks were lending too aggressively, fueling speculation or inflation, he'd collect their notes and demand redemption. This forced state banks to contract credit. When Biddle wanted to stimulate the economy, he'd accept state bank notes without demanding immediate redemption, allowing them to expand lending. You see, Biddle had essentially invented monetary policy. He couldn't control the money supply completely, but he could influence it more than anyone else in America. This was power that no private citizen should have held, but it was also power that produced remarkable economic stability. From 1823 to 1829, the American economy grew steadily without major financial panics. Credit remained available, but not excessive. Currency held stable value. Interest rates stayed predictable. Business could plan investments without fearing sudden financial convulsions. Biddle achieved this through careful management. He tracked state bank lending patterns across all 29 bank branches. He monitored commodity prices, trade flows, and credit demand. He adjusted the bank's lending to smooth out seasonal fluctuations and regional variations. When cotton prices spiked in New Orleans, Biddle would extend extra credit to cotton merchants, allowing them to purchase harvests and move product to market. When winter trade slowdowns reduced demand for credit in New England, he'd shift resources to southern and western branches, where planting season created credit needs. This coordination was impossible without the bank's national structure. State banks operated locally. They couldn't shift resources between regions or balance seasonal cycles. The second bank provided national financial integration that allowed America's expanding economy to function efficiently. Biddle documented all of this in detailed annual reports to Congress. He believed transparency would demonstrate the bank's value. He showed how the bank stabilized currency, provided emergency credit during local panics, and facilitated government financial operations. What he didn't understand was that this very effectiveness threatened people. Western farmers saw the bank restricting credit to prevent speculation, but they wanted speculative credit to buy land and expand operations. State bankers saw the bank limiting their lending, but unlimited lending was how they made profit. Look at what happened in 1825. A major British financial house collapsed, triggering panic in London. Credit dried up. American cotton and tobacco exports faced payment problems. Several American banks, heavily exposed to international trade, verged on failure. Biddle extended emergency credit, accepting collateral that other institutions wouldn't touch. He coordinated with British banks to maintain trade financing. The crisis passed with minimal damage to the American economy. Biddle's intervention had prevented a panic. Did Western farmers thank him? No. They never saw the disaster that didn't happen. They only knew that Biddle's bank hadn't given them as much credit as they wanted. This pattern repeated constantly. Biddle would prevent crises through technical management that remained invisible to ordinary citizens. Meanwhile, his restrictions on credit, necessary to prevent bubbles, created visible frustration. Here's what made this worse. Biddle made no effort to explain himself in terms ordinary people understood. His reports used technical financial language. His congressional testimony assumed listeners understood banking principles. He thought explaining the mechanics of monetary policy was sufficient. He never grasped that people don't judge institutions by technical performance. They judge them by how those institutions make them feel, and the bank made people feel powerless. Consider a farmer in Kentucky who wanted to borrow $500 to buy additional land. He'd go to his local state bank. The bank would say, "We'd love to lend to you, but the Bank of the United States is restricting our credit." The farmer didn't understand why. He just knew that some institution in Philadelphia run by people he'd never met was preventing him from expanding his farm. Or consider a state banker in Alabama who wanted to issue more notes to lend to local businesses. Biddle's branch manager would present his notes for redemption, forcing him to contract. The banker would tell his customers, "I can't help you because Biddle won't let me." Whether this was fair or accurate didn't matter. It created resentment. Biddle, sitting in Philadelphia, surrounded by people who understood and appreciated his work, had no idea how much he was hated in Kentucky, Alabama, Tennessee, and other western states. The bank's structure amplified this problem. Remember, foreign investors owned approximately 30% of bank stock. British financial houses, French aristocrats, and Dutch merchants earned dividends from American economic activity. This was economically rational. America needed foreign capital for development. But politically, it was toxic. Jackson and his supporters could accurately claim that Biddle's bank funneled American profits to European elites. The fact that this arrangement benefited the American economy didn't change how it felt to voters. By 1828, Biddle had built the most sophisticated financial institution in American history. He'd proven that central banking could stabilize an expanding economy. He demonstrated that expert management could produce better results than uncoordinated state banking. He'd also created the perfect target for populist attack, an unelected aristocrat managing an institution partly owned by foreigners, exercising more economic power than any elected official, using technical language that ordinary people couldn't understand, and restricting credit that voters desperately wanted. Andrew Jackson saw all of this and understood something Biddle didn't. Democracy beats expertise when voters get to choose between them. The bank's charter would expire in 1836. Biddle needed congressional renewal. Under normal circumstances, this should have been straightforward. The bank worked. Its performance was documented. Most congressmen understood its value. But circumstances weren't normal. Jackson had won the presidency in 1828 with overwhelming support from exactly the voters who hated the Bankwestern farmers, urban workers, state bankers, and anyone who resented elite financial power. Biddle thought he could navigate this through reason. He'd demonstrate the bank's value. He'd show that destroying it would harm the economy. He'd appeal to congressional leaders' understanding of sound financial policy. What he didn't understand was that Jackson wasn't interested in sound financial policy. Jackson wanted to destroy the bank precisely because it represented everything he opposed: concentrated power, elite privilege, and undemocratic authority. The war was coming. Biddle just didn't know it yet. Andrew Jackson hated banks with the intensity of personal experience. In 1795, he'd been ruined by financial panic. Jackson had accepted promissory notes for land sales, paper promises that became worthless when the debtor went bankrupt. Jackson ended up legally responsible for debts he hadn't incurred. He lost property. He faced financial destruction. The experience taught him that paper money was a fraud, banks were engines of corruption, and financial elites enriched themselves by manipulating debt to destroy honest men. These weren't abstract political beliefs. They were conclusions drawn from traumatic personal experience. Jackson rebuilt his fortune through plantation agriculture and slave trading, then entered politics representing Tennessee. His military career, defeating the British at New Orleans in 1815, made him a national hero. But he never forgot the financial panic of 1795. He never forgave the system that had nearly destroyed him. When Jackson ran for president in 1828, the bank wasn't his primary target. His campaign focused on broader themes: corruption in Washington, elite control of government, and the need to restore power to ordinary citizens. But his supporters understood that elite control included Biddle's bank. Jackson won overwhelmingly, carrying every Western state. His inaugural reception at the White House became legendary. Crowds of ordinary citizens flooded the mansion, breaking furniture, standing on silk-covered chairs with muddy boots, overwhelming the staff. Elites were horrified. Jackson saw it as democracy in action. His first annual message to Congress in December 1829 included 2 paragraphs about the bank. Not a frontal attack, just careful questioning. He noted that the bank's constitutionality was disputed, that its monopoly privileges were controversial, and that its foreign ownership troubled many citizens. He suggested Congress might want to consider whether to recharter the institution. Biddle read this and made his first fatal miscalculation. He thought Jackson was posturing. He believed that once Jackson understood the bank's importance, reason would prevail. He decided to educate the president about banking. This was spectacularly stupid. Jackson didn't need education. He understood perfectly well what the bank did. He just thought it shouldn't exist. Look at their first meeting. Jackson invited Biddle to the White House in 1829. The president was polite but clear. He had constitutional scruples about the bank. Biddle responded with technical explanations about the bank's operations. Jackson listened patiently, then said the issue wasn't technical. It was about power and whether any private institution should hold so much of it. Biddle left the meeting convinced Jackson didn't understand banking. Jackson concluded that Biddle was exactly the aristocratic elitist he'd suspected. For 2 years, an uneasy stalemate held. Jackson made occasional critical comments about the bank. Biddle continued managing it effectively. Congressional leaders from both parties assured Biddle they supported recharter. The bank's expiration in 1836 seemed far enough away to delay confrontation. Then Henry Clay destroyed the stalemate. Clay, senator from Kentucky, and Jackson's likely opponent in the 1832 presidential election, convinced Biddle to apply for recharter early. In 1832, 4 years before the charter expired, Clay's logic was pure political calculation. Force Jackson to either approve the recharter or veto it before the 1832 election. If Jackson vetoed it, Clay would make the bank a central campaign issue. Biddle should have refused. The bank didn't need early recharter. Applying 4 years early looked like a political move rather than a legitimate business need. It validated Jackson's claim that the bank was interfering in politics. But Biddle agreed. Why? Because he genuinely believed the bank would win a political fight. He thought most Americans would recognize the bank's value once the issue became public. He thought Jackson's opposition was politically isolated. This was his second fatal miscalculation. Biddle lived in Philadelphia, surrounded by people who agreed with him. He read newspapers written by editors who understood banking. He corresponded with congressmen who appreciated the bank's technical operations. He had no idea what ordinary voters thought because he never encountered them. The Recharter Bill moved through Congress in summer 1832. The debates were revealing. Supporters emphasized the bank's economic performance, its stable currency, and its efficient operations. Opponents attacked its concentrated power, its foreign ownership, and its elite control. Senator Thomas Hart Benton of Missouri delivered the most devastating speech. He didn't dispute the bank's effectiveness. Instead, he argued that effectiveness made it more dangerous, an institution that powerful shouldn't exist outside democratic control, regardless of how well it functioned. The bill passed. Narrowly, the Senate voted 2-8, 2-0, the House 107, 8-5. These weren't overwhelming margins, but they gave Biddle what he wanted. A political test of Jackson's opposition. Jackson vetoed the bill on July 10, 1832. The veto message was a masterpiece of populist rhetoric. Jackson's advisors, particularly Amos Kendall, crafted language that spoke to ordinary voters rather than financial experts. The message didn't dispute the bank's technical performance. It questioned whether any such institution should exist. Key passages hit directly at democratic accountability. The bank, Jackson argued, represented advancement of the few at the expense of the many. Its foreign stockholders earned profits from American labor. Its monopoly charter granted privileges that contradicted equal rights. Its power exceeded that of elected officials. Then came the passage that made Biddle's blood boil. It is to be regretted that the rich and powerful too often bend the acts of government to their selfish purposes. He published a pamphlet answering Jackson's veto point by point, using technical arguments about banking operations, constitutional precedent, and economic benefits. He had prominent supporters republish the veto message with annotated corrections showing Jackson's economic misunderstandings. This was his third fatal miscalculation. Biddle fought Jackson with facts when Jackson was fighting with emotions. Biddle explained banking mechanics when Jackson was questioning power structures. Biddle assumed educated rebuttals would win when Jackson was appealing to voters who distrusted educated elites. The 1832 election became a referendum on the bank. Clay made it his central issue, arguing that destroying the bank would cause economic chaos. Jackson campaigned against the monster bank and the corrupt elite who controlled it. Jackson won in a landslide. He carried 219 electoral votes to Clay's 49. He won 55% of the popular vote. Western states supported him overwhelmingly. Even some eastern states that should have supported the bank backed Jackson. The election results devastated Biddle. He believed that most Americans, given clear information about the bank's benefits, would support it. The voters had spoken, and they'd rejected him decisively. But here's what Biddle didn't understand. Voters weren't rejecting the bank's performance. They were rejecting the principle that unelected experts should control the economy. Even voters who benefited from the bank's stability were uncomfortable with its power. Think about what this meant. Jackson had proven that democratic opposition could defeat even the most effective institution if that institution appeared undemocratic. Technical competence wasn't enough to justify political power. Effectiveness didn't grant legitimacy. This was a fundamental challenge to Biddle's entire worldview. He'd spent his life believing that smart people who understood complex issues should make decisions about those issues. Jackson had proven that in a democracy, voters might rationally prefer worse outcomes if those outcomes came from democratic processes. Biddle refused to accept this. The bank's charter didn't expire until 1836. He had 4 years to operate. He decided he'd prove the bank's necessity by demonstrating what happened without it. This led to his fourth and most destructive miscalculation. If Jackson wanted to destroy the bank, Biddle would show what destruction looked like. He'd contract credit, create financial pressure, and force the economy to face the consequences of Jackson's irresponsible policy. Biddle announced that because the recharter had failed, The bank needed to strengthen its position in preparation for liquidation. This meant calling in loans, restricting new credit, and demanding repayment from state banks. Perfectly legal, technically justified, economically catastrophic. Within months, credit markets seized, interest rates spiked, businesses couldn't get loans, state banks suddenly facing redemption demands had to contract their own lending. The economy lurched toward crisis. Biddle's supporters begged him to relent. He refused. He told them the pressure was necessary to force Jackson to back down. He predicted that public outcry would compel Congress to override Jackson's veto and recharter the bank. Jackson's response was simple: "The bank is trying to kill me, but I will kill it." The president ordered his Treasury Secretary to remove all federal deposits from the bank immediately. Treasury Secretary McLean refused. He thought the action was economically reckless. Jackson fired him and appointed William Duane. Duane also refused. Jackson fired him too and appointed Roger Taney, who complied. By September 1833, federal deposits were being moved from the bank to state banks that Jackson's opponents called pet banks. The bank's capital base collapsed. Its ability to influence credit markets evaporated. Its power was broken. Biddle had started the bank war believing he'd win through technical superiority. He'd ended it by proving Jackson's central claim, that the bank had too much power and used it for political purposes. Biddle's credit contraction, intended to prove the bank's necessity, instead proved that Jackson was right to destroy it. The public blamed Biddle for the economic pain, not Jackson. Newspapers reported stories of businesses denied credit, farmers facing foreclosure, and workers losing jobs, all because Biddle was trying to extort Congress into rechartering his bank. By early 1834, the political situation was irreversible. The bank would die. The only question was how much damage Biddle would cause before accepting reality. The winter of 1833-34 became known as Biddle's Panic. Credit froze across the nation. Interest rates on commercial loans reached 24% in some markets, far above normal rates. Businesses that had operated profitably for years suddenly couldn't secure working capital. Merchants couldn't finance inventory purchases. Manufacturers couldn't meet payroll. Biddle sat in his marble palace and watched economic distress mount. His mail brought desperate pleas from businessmen facing ruin. Delegations visited Philadelphia begging him to ease credit conditions. He turned them all away with the same message: pressure President Jackson to restore the bank's charter. This was financial terrorism. Biddle was deliberately inflicting economic pain to achieve political objectives. He admitted it openly. In a letter to a Kentucky supporter, he wrote, "Nothing but the evidence of suffering abroad will produce any effect on Congress." The bank had sufficient resources to maintain normal lending. The credit contraction wasn't economically necessary. It was politically calculated. Biddle was weaponizing finance, proving exactly what Jackson had claimed, that concentrated financial power could be used to coerce elected officials. His supporters rationalized this as justified self-defense. The bank was fighting for survival against an unreasonable president. Biddle was simply demonstrating the institution's importance by showing what happened without its stabilizing influence. But look at the human cost. A textile manufacturer in Lowell, Massachusetts, wrote to his congressman describing how he'd operated successfully for 8 years, always repaid loans on time, and now faced bankruptcy because the bank had called in his credit. His 200 workers would lose jobs. Why? Not because his business had failed, but because Biddle was making a political point. A cotton merchant in New Orleans defaulted on commitments to purchase farmers' crops because he couldn't secure trade financing. Those farmers lost money. Some lost their farms, not because the cotton market had collapsed, but because Biddle had decided to contract credit. Jackson refused to bend. He'd grown up poor. He'd survived financial ruin. He'd fought in wars. Biddle's economic pressure didn't frighten him. It enraged him. The president saw Biddle's tactics as confirming everything he'd said about the bank representing aristocratic tyranny. In December 1833, Jackson's message to Congress was defiant. The bank has set itself against the government and the people. He portrayed the credit contraction as proof that the bank was too dangerous to exist. Public opinion, which had been divided, started shifting against Biddle. Congressional allies of the bank tried to help. They introduced resolutions condemning Jackson's removal of deposits. They held hearings documenting business failures caused by credit contraction. They assembled petitions from merchants and manufacturers begging for relief. Senator Henry Clay orchestrated a formal censure of President Jackson in March 1834, one of only 2 presidents ever censured by the Senate. The resolution condemned Jackson for overstepping his constitutional authority by removing deposits without congressional approval. Biddle thought this was vindication. He didn't realize it was his final political defeat. The censure passed the Senate but went nowhere in the House. It didn't restore the deposits or force Jackson to back down. It just made senators feel important while accomplishing nothing. What's fascinating is how completely Biddle misread the political dynamics. He assumed that business support for the bank would translate into political pressure on Jackson. He thought that by creating economic pain, he'd force Jackson's supporters in Congress to abandon him. He didn't understand that Jackson's supporters were primarily Western and Southern representatives, whose constituents hated the bank more than they feared economic contraction. The pressure Biddle created strengthened their resolve rather than weakening it. Consider the mechanics of how information traveled in 1834. Biddle read Philadelphia newspapers that covered business community complaints about credit conditions. Those newspapers made the crisis seem universally condemned. But in Tennessee, Alabama, and Kentucky, newspapers praised Jackson for standing firm against financial tyranny. Different audiences received completely different information. Biddle also fundamentally misunderstood his own position. He thought the bank was fighting against one unreasonable president. Actually, he was fighting against a democratic movement that questioned whether financial elites should have political power at all. This wasn't about Andrew Jackson personally. Jackson was the vehicle for broader resentment of elite control. Even if Biddle had destroyed Jackson politically, which he couldn't, the underlying sentiment would have remained. By spring 1834, Biddle's strategy was clearly failing. The credit contraction had created economic hardship but hadn't forced political concessions. Public opinion blamed Biddle for the pain, not Jackson. Congressional support for the bank was eroding rather than strengthening. Biddle faced a choice: continue the contraction and hope Jackson eventually surrendered, or relent and admit defeat. His pride wouldn't allow surrender. He continued restricting credit through the summer of 1834. Then the economy began adapting without him. State banks, freed from the bank's regulatory pressure, expanded lending aggressively. Pet banks that received federal deposits used that capital to finance business operations. Credit flowed through alternative channels. The transition was chaotic and ultimately disastrous, but it demonstrated that the economy could function without Biddle's bank. This was crucial. Biddle had claimed the bank was indispensable. The fact that commerce continued, even messily, undermined that claim. By autumn 1834, Biddle quietly began easing credit conditions. He never formally announced that the contraction was ending. That would have required admitting it had failed, but lending gradually increased. The panic subsided. The damage to Biddle's reputation was permanent. Business communities that had supported him now questioned whether they could trust an institution that would deliberately harm the economy for political purposes. Even bank supporters were disturbed by the weaponization of finance. Here's what Jackson's supporters understood that Biddle never grasped. The bank war wasn't really about banking. It was about democracy versus expertise, popular control versus elite management, and whether unelected technical specialists should have power to make decisions that affected everyone's lives. Biddle thought he was defending sound financial policy. He was actually defending an aristocratic model of governance that American democracy was rejecting. The bank's federal charter would expire in 1836. Biddle obtained a state charter from Pennsylvania, hoping to continue operations as a state-chartered institution. The re-charter allowed the bank to continue functioning, but without federal deposits or national regulatory authority. It became just another large bank, still powerful but no longer supreme. Biddle convinced himself this was acceptable. The bank would continue providing financial services. It would demonstrate its value through performance. Eventually, a future administration would recognize the mistake of destroying federal charter. This was desperate fantasy. The fight was over. Jackson had won completely. What made Biddle's defeat particularly devastating was its totality. He hadn't just lost the recharter fight, he'd proven Jackson's accusations by using the bank as a political weapon. He'd validated every criticism Jackson had made about concentrated financial power being dangerous and undemocratic. Historians would later argue about whether Jackson's economic policies were wise. They'd debate whether destroying the bank caused the subsequent financial panics, but nobody could dispute that Biddle had given Jackson exactly the ammunition needed to destroy him. The bank war's real lesson wasn't about banking. It was about power. Technical expertise doesn't grant democratic legitimacy. Effectiveness doesn't justify unaccountable authority. In a democracy, the people's representatives get to make decisions even when experts disagree. Biddle never accepted this. He died believing he'd been right about policy, but defeated by an ignorant demagogue. He never understood that being right about policy didn't matter if you couldn't win democratic support. The Pennsylvania chartered bank he hoped would vindicate him would instead complete his destruction. Nicholas Biddle spent 1834 and 1835 rebuilding his institution under Pennsylvania state charter. Without federal oversight or federal deposits, the bank was theoretically weaker, but Biddle convinced himself that freed from political constraints, he could operate more aggressively and profitably. This was his fifth fatal miscalculation. The federal charter's restrictions had protected the bank from itself. State oversight was far weaker. Pennsylvania regulators lacked expertise to monitor complex financial operations. The legislature had granted the charter partly because Biddle's institution brought prestige to Philadelphia and tax revenue to Pennsylvania. They weren't going to scrutinize too carefully. Biddle, freed from constraint, would demonstrate everything Jackson had warned about, that concentrated financial power without accountability inevitably becomes corrupt. Let me show you how the disaster unfolded. The Bank of the United States of Pennsylvania, as it was now called, needed to replace lost federal deposit revenue. Biddle decided to generate profits through aggressive cotton speculation. Here's how the scheme worked. Cotton was America's largest export, primarily shipped from southern ports to British textile mills. Prices fluctuated based on British demand, American supply, and credit availability. Most cotton traders operated on thin margins, borrowing to purchase crops and repaying when cotton sold in Liverpool. Biddle decided the bank would dominate this trade. He'd extend massive credit to cotton merchants, allowing them to purchase entire regional harvests. The bank would effectively control cotton supply. When prices rose due to artificial scarcity, the bank and its merchant partners would sell at huge profits. This was market manipulation on a scale that would be illegal in modern markets. But in 1835, financial regulation barely existed. Biddle operated in a legal gray zone where aggressive business strategy and fraud had no clear boundary. The initial results seemed brilliant. In 1835, Biddle's agents extended roughly $7 million in cotton loans, enormous for that era. Cotton prices rose as the bank's operations created apparent scarcity. Merchants who borrowed from Biddle made substantial profits. The bank earned interest on loans and took cuts of trading profits. Biddle's confidence soared. He'd proven that financial expertise could generate returns without government interference. The bank's stock price rose. Philadelphia business community praised his acumen. It looked like vindication, but look closer at what was actually happening. Biddle was lending money to merchants who used it to buy cotton, which they stored in warehouses, rather than immediately shipping to Britain. This created artificial scarcity that drove up prices. The merchants then borrowed more money against their cotton inventory at inflated prices. This is a classic bubble mechanism. Prices rise because buying is creating scarcity. Rising prices justify more borrowing. More borrowing finances more buying. The cycle continues until someone realizes the underlying asset isn't actually worth the inflated price. Biddle didn't see the bubble. He saw successful strategy. He expanded operations in 1836, extending cotton loans approaching $10 million. He encouraged merchants to hold cotton longer, waiting for even higher prices. Then reality intervened. British textile mills, facing high cotton prices, reduced purchases and drew down inventories they'd accumulated earlier. Demand dropped. Cotton prices fell. Suddenly, merchants holding massive cotton inventories borrowed against inflated prices couldn't sell without losses. They couldn't repay loans. The bank held collateral, cotton worth far less than the loans it secured. Biddle faced a choice: acknowledge losses and contract operations, or double down by extending more credit to cotton merchants, hoping prices would recover. He doubled down. Through 1837 and 1838, the bank loaned additional millions to cotton merchants, taking their cotton as collateral at prices that bore no relationship to actual market value. The bank's books showed these loans as performing assets. Actually, they were mounting losses disguised through fraudulent accounting. You see, this is what happens when financial institutions operate without oversight. They can hide losses through creative bookkeeping. They can pretend everything's fine while insolvency approaches. Without external auditors or regulatory supervision, the fantasy can continue until it catastrophically collapses. Biddle's annual reports to Pennsylvania showed the bank earning steady profits and maintaining strong capital position. These reports were fabricated. The bank was being consumed by bad loans. What made this worse was that Biddle knew. He wasn't ignorant of the bank's deteriorating condition. Internal memos show he understood cotton loans were problematic, but he believed he could trade his way out of trouble. Just one more loan, one more season, one more price recovery, and everything would be fine. This is the classic gambler's fallacy applied to banking. Biddle was chasing losses, convinced that his expertise would ultimately prevail over market forces. Meanwhile, the broader American economy was entering crisis. The destruction of the second bank had eliminated the central stabilizing force in American finance. State banks expanded lending recklessly. Speculation in Western lands reached manic levels. Credit bubbles inflated in multiple sectors simultaneously. Jackson, recognizing the speculation was getting out of control, issued the Specie Circular in 1836, requiring that Western land purchases be paid in gold or silver rather than paper notes. This was sensible policy, but terrible timing. It triggered sudden credit contraction. The Panic of 1837 began in May with New York bank failures. Within weeks, the crisis spread nationwide. Banks suspended specie payments, refusing to redeem their notes for gold or silver. Credit markets froze. Businesses failed. Unemployment spiked. The economy entered depression that would last 6 years. Biddle's bank was particularly vulnerable. The cotton speculation had consumed its capital. The economic panic made it impossible to liquidate cotton holdings at any reasonable price. Merchants who owed the bank money went bankrupt, leaving the bank holding worthless collateral. Through 1838 and 1839, Biddle frantically tried to maintain appearances. He published reports claiming the bank remained sound. He reassured depositors their money was safe. He convinced Pennsylvania legislature to conduct only superficial oversight. But creditors were getting nervous. European investors who had purchased bank bonds started demanding information. British financial institutions that had extended credit to the bank wanted detailed accounting. Biddle stonewalled them all, claiming competitive confidentiality prevented disclosure. This worked temporarily. Biddle's reputation, though damaged, still carried weight. People wanted to believe that Philadelphia's greatest financier knew what he was doing. The truth was that by 1839, the bank was effectively insolvent. Its assets, primarily cotton loans and cotton inventories, were worth far less than its liabilities to depositors and bondholders. Only the fact that everybody didn't demand their money simultaneously prevented immediate collapse. Biddle finally resigned as bank president in March 1839. He claimed health reasons. Actually, he was fleeing before the disaster became public. He'd positioned loyal subordinates to maintain the fiction while he quietly sold his own bank stock and protected personal assets. This was straightforward fraud. Biddle knew the bank was failing, but presented it as sound while personally getting out. He used inside information to protect himself while leaving depositors and investors exposed to losses. For 2 more years, the bank limped along under new leadership that inherited Biddle's disaster. They tried to liquidate cotton holdings. They tried to collect on bad loans. They tried to maintain confidence. All of it failed. In 1841, the Bank of the United States of Pennsylvania suspended operations. It couldn't meet obligations to depositors. Its stock became worthless. Its bonds defaulted. Thousands of investors lost everything. Pennsylvania's reputation was damaged. The state had chartered and supposedly supervised an institution that collapsed spectacularly. The investigation that followed revealed the extent of Biddle's fraud. Cotton loans had been wildly overvalued. Loans to insiders went undisclosed. Profits were fabricated. Capital was depleted. The bank had operated as a criminal enterprise disguised as a financial institution. Pennsylvania brought fraud charges against Biddle in 1841. The indictment accused him of conspiracy to defraud investors, falsifying financial reports and personal enrichment through insider dealing. The man who'd run America's most powerful financial institution was now a criminal defendant facing prison. The Pennsylvania courtroom in February 1842 was packed. Nicholas Biddle, age 56, sat at the defense table looking far older than his years. The previous 8 years had aged him brutally. His hair had gone completely white. His face showed deep lines. His hands trembled slightly. Whether from anxiety or illness was unclear. The charges against him were devastating. 18 counts including conspiracy to defraud, falsifying bank records, illegal personal loans, market manipulation, and breach of fiduciary duty. If convicted on all counts, he faced decades in prison. District Attorney John Swift presented the prosecution's case methodically. He showed that cotton loans had been issued at values far exceeding market prices. He demonstrated that Biddle had borrowed from the bank for personal investments, while claiming the bank remained fully capitalized. He revealed that annual reports published by Biddle bore no relationship to the bank's actual financial condition. The defense team, led by prominent Philadelphia lawyers, argued that Biddle had made business judgments that, unfortunately, didn't succeed. Banking involves risk. Cotton speculation was legal. The losses resulted from unforeseeable economic conditions, not criminal intent. This defense might have worked if Biddle's fraud had been subtle, but the evidence was overwhelming. Internal memos showed Biddle knew cotton loans were worthless, while reporting them as performing assets. Letters demonstrated that he personally sold bank stock, while telling public investors the bank was sound. Accounting records proved systematic falsification. The trial lasted 5 weeks. Newspapers across America covered it extensively. The man who'd been America's most powerful banker was now exposed as a common fraud. Here's what made the trial particularly brutal. Witness after witness testified about personal losses. A widow who'd invested her late husband's life insurance in bank bonds, worthless. A merchant who'd deposited business receipts in the bank, gone. A craftsman who'd bought bank stock for retirement, destroyed. These weren't abstract losses. They were real people who trusted Biddle's reputation and been destroyed by his fraud. The jury deliberated for 3 days. When they returned, the verdict was guilty on 14 of 18 counts. The courtroom erupted. Biddle showed no emotion, but observers noted his hands were shaking violently. Judge William Duane, ironically the same man Jackson had briefly appointed as Treasury Secretary, delivered the sentence. He acknowledged Biddle's previous contributions to American finance. He noted that the defendant was in failing health. Then he pronounced 10 years imprisonment and $1 million in fines. Biddle's lawyers immediately filed appeals. Pennsylvania law allowed convicted defendants to remain free pending appeal if they could post bond. Biddle's remaining assets and support from friends who still believed in him allowed bond. He left the courthouse, technically convicted, but not yet imprisoned. The appeals process would consume 2 years. During this time, Biddle lived in a strange limbo, a convicted felon awaiting final judgment, maintaining his innocence while evidence of his guilt was overwhelming. What's interesting is how Philadelphia society reacted. Some former friends abandoned him completely. Others maintained loyalty, convinced that Biddle had been scapegoated for systemic failures. The financial community was divided between those who saw him as a criminal and those who saw him as a tragic figure destroyed by political enemies. Biddle himself never admitted guilt. In letters to supporters, he portrayed the prosecution as political revenge. Jackson's allies, he claimed, had finally succeeded in destroying him through legal persecution. The bank's failure resulted from the economic chaos Jackson had caused by destroying the federal charter, not from Biddle's management. This was psychologically revealing. Biddle couldn't accept that his own arrogance and fraud had destroyed him. He needed to believe he'd been destroyed by external enemies rather than internal failures. Look at his financial situation in 1842-43. The once wealthy aristocrat was essentially broke. The court had seized most assets pending appeal. His magnificent estate, Andalusia, a Greek revival mansion on the Delaware River with extensive grounds, faced foreclosure. His art collection, carefully assembled over decades, was being sold to pay legal bills. The social collapse was equally complete. Philadelphia's elite, who'd once competed for invitations to Biddle's salons, now avoided him. Former political allies distanced themselves. Even many bank supporters abandoned association with a convicted fraud. Biddle spent his days at Andalusia, mostly isolated. His health deteriorated. He developed what doctors called digestive disturbances, probably stress-related gastrointestinal problems. He had difficulty sleeping. He lost weight. His wife, Jane, remained loyal. She'd never been actively involved in his business affairs and genuinely believed he was being persecuted. Their children were less certain. Correspondence suggests they struggled with loving their father while recognizing his guilt. The appeals focused on technical legal issues, whether the trial judge had properly instructed the jury, whether certain evidence had been admissible, whether the charges had been properly specified. Biddle's lawyers filed motion after motion, hoping to find procedural errors that would overturn the conviction. Pennsylvania Supreme Court heard arguments in March 1844. Chief Justice John Bannister Gibson wrote the opinion, released in August 1844. The court rejected most appeals but found that the trial judge had made errors in jury instructions regarding the fraud charges. The result was technical vindication. The conviction was overturned on procedural grounds. But the court specifically noted that evidence of Biddle's misconduct was overwhelming and that the prosecution could retry him if they chose. District Attorney Swift faced a choice: retry Biddle with corrected jury instructions or drop the case given Biddle's failing health and the fact that he'd already been publicly destroyed. Swift chose to drop charges. Biddle was legally cleared but socially condemned. Everyone knew the appeal had succeeded on technicality, not innocence. For Biddle, this was almost worse than conviction. A conviction would have been clean. He'd have been martyred to political persecution. Technical acquittal left him in limbo, legally innocent but publicly guilty. He spent his final months at Andalusia, rarely leaving the estate. His correspondence from this period shows a man struggling with cognitive dissonance. He couldn't acknowledge that he'd been wrong about the bank war, wrong about cotton speculation, and wrong to commit fraud. So he constructed an alternative narrative where he'd been right about everything but destroyed by circumstances beyond his control. This is the final tragedy of Nicholas Biddle. He was capable of seeing his mistakes, learning from them, and perhaps finding redemption. But his ego wouldn't allow it. He died believing he'd been victimized rather than recognizing he'd victimized others. The physical toll was severe. By late 1844, Biddle could barely eat. He'd lost nearly 50 pounds. He rarely slept through the night. His doctors diagnosed general decline, though modern analysis suggests severe depression and anxiety. On February 27, 1844, Nicholas Biddle died at Andalusia. He was 58 years old. The official cause was recorded as heart failure, but everyone understood he'd essentially been killed by stress, shame, and the collapse of everything he'd built. The funeral was small. Philadelphia's elite largely stayed away. A few dozen mourners gathered at Andalusia for a brief episcopal service. Nicholas Biddle was buried in the family plot on the estate he could no longer afford to maintain. Newspapers across America covered his death, but not sympathetically. The New York Herald ran the headline, "Death of the Banker Who Ruined Thousands." The Washington Globe, a Democratic paper, declared Nicholas Biddle has gone to his reward, and the nation he sought to control has survived him. Even papers that had supported the bank during the 1830s offered only faint praise. The Philadelphia Inquirer acknowledged his early contributions to American finance, but couldn't ignore his tragic fall from grace and betrayal of public trust. What's striking is how quickly Biddle was forgotten. Within a decade, history books barely mentioned him. The bank war was remembered as Jackson's triumph, with Biddle reduced to a footnote, the aristocratic banker who'd opposed democracy and lost. But let me show you what Biddle's final years reveal about the human cost of political and financial combat. This wasn't just an abstract story about banking policy. It was the destruction of a specific human being who'd built his entire identity around being right, being important, and being in control. Consider what Biddle lost. Wealth, gone. Reputation, destroyed. Social position, evaporated. Political influence, non-existent. Legacy tarnished, health ruined, but beyond these tangible losses was something deeper, the collapse of his sense of self. Biddle had spent his life believing he deserved power because he was smarter, better educated, and more capable than ordinary people. His expertise justified his authority, his rationality validated his decision-making, his elite status proved his superiority. The bank war and subsequent collapse demolished these beliefs. He'd been smarter than Jackson, but lost. He'd been right about economic policy, but that didn't matter. He'd exercised authority, but that authority had been illegitimate in a democracy. Letters from his final years show a man struggling with this reality. He wrote to a former bank colleague in 1843, "I acted according to principles of sound finance, yet I am condemned as a criminal. I served the nation's interests, yet I am reviled as a tyrant. I cannot reconcile this." He still couldn't understand that being right about policy doesn't justify undemocratic exercise of power. He still thought technical expertise should grant authority, regardless of popular consent. You see, Biddle never actually learned the lesson his distraction was teaching. He just knew he'd lost without understanding why. His family suffered alongside him. Jane Biddle watched her husband deteriorate physically and psychologically. She managed the estate as creditors circled. She dealt with social ostracism. Their children faced futures tainted by their father's disgrace. The children's experiences were particularly painful. Nicholas Jr., who'd worked briefly at the bank, found employment difficult. No Philadelphia financial institution would hire him. He eventually moved to New York and took a minor position in a trading house, working anonymously. Daughter Margaret married before the scandal and was partly insulated. But her husband faced questions about the family connection. Her father's disgrace cast a shadow over her entire life. What nobody wanted to acknowledge was how much Biddle's personal destruction represented broader tensions in American society. The country was wrestling with fundamental questions. Should experts have power over areas requiring technical knowledge, or should democratic processes control all decisions regardless of expertise? Can effectiveness justify authority, or does authority always require democratic legitimacy? Biddle and Jackson represented two answers. Biddle, yes, experts should have power. Effectiveness does justify authority. Some issues are too complex for democratic decision-making. Jackson, no, democracy supersedes expertise. Authority requires popular consent. No issue is too complex for voters to have ultimate say. American history chose Jackson's answer. We decided that democratic legitimacy trumps technical expertise. We accepted that this might produce worse policy outcomes, but considered democratic accountability more important than optimal policy. Biddle's destruction was the sacrifice that established this principle. He had to be completely destroyed, financially, socially, legally, to demonstrate that expertise doesn't grant power outside democratic accountability. This was brutal but probably necessary. If Biddle had survived with wealth and status intact, the lesson would have been that elite power survives even when repudiated democratically. His complete destruction sent the opposite message. No one is too important, too wealthy, or too connected to escape accountability. But here's what gets complicated. Was justice served? Biddle committed fraud. He falsified records, misrepresented the bank's condition, and personally profited while investors lost everything. He deserved prosecution. Yet the fraud happened because he'd been pushed toward desperation by Jackson's political destruction of the bank. The cotton speculation was an attempt to replace lost federal revenue. The accounting fraud was an attempt to hide losses from speculation undertaken to keep the bank viable after losing its federal charter. Does this excuse the fraud? No, but it provides context. Biddle wasn't a criminal who entered banking to steal. He was a banker who, after losing a political fight, made increasingly desperate and unethical decisions trying to prove he'd been right. Think about the path that led from respected bank president to convicted fraud. Each step seemed justifiable in isolation. Contract credit to pressure Jackson, defending the institution. Speculate in cotton, replacing lost revenue. Hide losses, maintaining confidence to prevent bank runs. Falsify reports, protecting depositors from panic. Each decision led to the next. Each escalation made reversal harder. This is how good people end up doing terrible things, through a series of decisions that seem defensible individually, but are catastrophic cumulatively. Biddle's final months at Andalusia, isolated and dying, represent the complete collapse of the Philadelphia aristocrat who'd once dominated American finance. The Greek Revival mansion that was supposed to be a monument to his success became a prison where he waited to die. His last letter, written 2 weeks before his death to a cousin, is heartbreaking. He wrote, "I find myself at the end, uncertain whether my life represented service or vanity, contribution or corruption. I believed I served the nation. The nation has judged otherwise. I cannot determine who was correct. This is as close as Biddle ever came to acknowledging he might have been wrong. Even at death's door, he couldn't fully accept responsibility. The best he could manage was uncertainty. When his estate was finally settled in 1845, debts exceeded assets. Creditors received cents on the dollar. Andalusia was sold to pay legal judgments. The art collection Biddle had spent decades assembling was auctioned. Bringing far less than he'd paid, the family had to leave Philadelphia to escape creditors and social stigma. Nicholas Biddle, who'd begun life with every advantage American society could offer, left his family worse off than if he'd never lived at all. This was the complete inversion of everything he believed about himself, that his intelligence, education, and expertise would benefit everyone around him. Instead, his arrogance had destroyed his family, ruined thousands of investors, and contributed to financial chaos that would plague America for decades. The bank war's victor, Andrew Jackson, left office in 1837 and died in 1845, just months after Biddle. Jackson went to his grave convinced he'd saved American democracy from financial tyranny. His supporters erected monuments, celebrating his triumph over the monster bank. But the economic consequences validated almost everything Biddle had warned about. The destruction of the second bank removed the only institution capable of stabilizing American currency and credit. State banks expanded lending recklessly, creating massive speculation bubbles. The panic of 1837 began 2 months after Jackson left office. Banks failed, businesses collapsed, unemployment reached devastating levels. The Depression lasted until 1843, making it the longest economic crisis in American history to that point. Was this Jackson's fault? Partially. Destroying the bank eliminated the stabilizing mechanism that might have prevented or mitigated the crisis. But Biddle bore responsibility too. His credit contraction in 1833-34 had weakened the financial system. His subsequent fraud had destroyed confidence in banking regulation. What's interesting is that neither man's prediction came completely true. Jackson predicted America would be better off without the bank. Wrong. The economy suffered. Biddle predicted chaos without central banking. Right. But he'd contributed to that chaos through his own actions. The reality was more complex than either man acknowledged. Central banking was valuable, but Biddle's version, unaccountable to democratic oversight, was unsustainable. Democratic control of finance was important, but Jackson's version, destroying expertise without replacing it, was irresponsible. America needed what neither man offered: democratic accountability combined with technical expertise. That wouldn't emerge until the Federal Reserve System was created in 1913, 77 years after the second bank died. Let me show you what Biddle's legacy actually became. In the decades after his death, America lurched through repeated financial panics: 1857, 1873, 1893, 1907. Each crisis demonstrated the need for central banking. Each recovery reinforced that need. The absence of central banking cost America dearly. Financial instability hindered economic development. Bank failures destroyed savings. Credit crunches prevented productive investment. The economic costs of not having a central bank eventually exceeded any democratic concerns about concentrated financial power. When Congress finally created the Federal Reserve in 1913, they incorporated Biddle's technical insights while addressing Jackson's democratic concerns. The Fed would stabilize currency and credit, but with congressional oversight and presidential appointments. Power would be divided among regional banks rather than concentrated in one institution. Foreign ownership would be prohibited. The Federal Reserve essentially vindicated Biddle's argument that central banking was necessary, while accepting Jackson's argument that it needed democratic accountability. Both men had been partly right, but here's the question that haunts Biddle's legacy. Was the bank war inevitable? Could Biddle have saved the bank through different tactics? The answer is complicated. If Biddle had compromised with Jackson in 1829-30, accepting reforms that increased democratic oversight while preserving the bank's core functions, recharter might have succeeded. If he'd declined Henry Clay's advice to apply for recharter early, forcing the fight before Jackson's 1832 re-election, the outcome might have been different. But these alternatives required Biddle to accept democratic accountability, precisely what his entire worldview rejected. He couldn't compromise because compromise would have meant admitting that expertise doesn't justify power. His principles prevented the flexibility that might have saved him. Think about the broader implications. Biddle represented the conflict between expertise and democracy that remains unresolved today. Should central banks be independent of political oversight? Should regulatory agencies be insulated from democratic pressure? Should technical experts make decisions about complex issues? Modern democracies struggle with these questions constantly. We want experts making technical decisions, but we also want democratic accountability. We want regulatory independence, but we also want elected officials responsive to voters. We want economic stability, but we also want democratic control. Biddle's story shows what happens when expertise rejects democratic legitimacy. He had the technical knowledge to manage the economy effectively, but he lacked the democratic legitimacy to exercise that power. When forced to choose between effectiveness and legitimacy, democracy chose legitimacy, even at the cost of economic chaos. Was this choice correct? Biddle's supporters argue no destroying the bank caused unnecessary economic suffering that harmed the very ordinary people Jackson claimed to represent. Jackson's supporters argue yes, preventing concentrated undemocratic power was worth economic costs because concentrated power inevitably becomes corrupt. The evidence supports both views. The bank's destruction did cause economic suffering, but Biddle's corruption, after getting Pennsylvania charter, proved that concentrated power without oversight becomes corrupt. Perhaps the real lesson is that both men were catastrophically wrong. Biddle was wrong to resist democratic accountability. Jackson was wrong to destroy expertise without replacement. The bank war was a tragedy where both sides made terrible decisions that harmed the nation. Biddle's personal story adds another dimension. He was intelligent, educated, and genuinely believed he was serving public interest. He wasn't a cartoon villain or simple corrupt banker. He was a complex person whose fatal flaw, arrogance, destroyed him. This makes his story more tragic and more instructive. If Biddle had been obviously corrupt from the beginning, his downfall would be simple morality tale. But he wasn't. He started with genuine merit and good intentions. He became corrupt through pride, desperation, and inability to accept being wrong. That trajectory, from merit to corruption, is worth understanding. How do accomplished people become frauds? How does confidence become arrogance? When does defending your legacy become destroying it? Biddle's answers to these questions are disturbing because they're recognizable. He convinced himself that his ends justified his means. He told himself that his expertise made normal rules not apply. He believed that because he'd been right about the bank's value, his subsequent fraud was justified by larger truths. These rationalizations don't work. Expertise doesn't excuse fraud. Being right about policy doesn't justify criminal behavior. Good intentions don't validate bad actions. Modern financial leaders should study Biddle's fall carefully. The regulatory violations that toppled major institutions in 2008, the frauds that destroyed companies like Enron and WorldCom, the scandals that ruined executives, they all followed similar patterns. Smart people convinced they're right, cutting ethical corners, refusing accountability, ultimately destroying themselves and harming thousands. When we ask whether Nicholas Biddle deserves sympathy, the answer is complicated. He deserves sympathy for being human, for experiencing destruction, suffering, and death. He doesn't deserve sympathy for the specific actions that caused his downfall: fraud, market manipulation, betraying depositors' trust. His death in 1844, broken and disgraced, represented complete justice and terrible tragedy simultaneously. Justice because he'd committed serious crimes that deserved punishment. Tragedy because a capable person destroyed himself through pride and poor decisions. The final assessment of Nicholas Biddle has to be mixed. He made genuine contributions to American finance, demonstrating that central banking could work, developing techniques for monetary management, proving that national financial systems were possible. He also committed fraud, resisted democratic accountability, and contributed to economic chaos. He was right that America needed central banking. He was wrong that unelected experts should control it without oversight. He was smart enough to manage the economy. He wasn't wise enough to understand that management required democratic legitimacy. His greatest failure wasn't economic, it was political. He never understood that in a democracy, being right isn't enough. You also have to persuade people that you're right, and that you deserve their trust to implement your ideas. Jackson understood this intuitively. He couldn't have explained bank reserve ratios, but he understood political legitimacy. He knew that voters would support destroying the bank even if it hurt the economy, because concentrated, unaccountable power offended democratic principles. The bank war was about this fundamental tension. Biddle lost because he fought on the wrong battlefield. He tried to win with technical arguments when Jackson was fighting with democratic values. No amount of economic expertise could overcome the political illegitimacy of unaccountable power. So we've seen how America's most powerful banker was destroyed by his inability to understand that expertise doesn't grant authority in a democracy. How a brilliant financial mind's arrogance led to fraud, ruin, and death. How the conflict between elite management and democratic control produced tragedy for both sides and chaos for the nation. Today, the second bank of the United States' building still stands in Philadelphia, operating as a museum. Tourists photograph its impressive Greek columns, rarely knowing the dramatic story that unfolded inside. Nicholas Biddle's estate, Andalusia, was preserved by his descendants and eventually opened to public tours. You can walk through the rooms where he spent his final desperate months. But Biddle's real legacy isn't in these physical structures. It's in the unresolved tensions he exposed. America still struggles with the questions the bank war raised. How much power should unelected experts have? Should technical expertise override democratic decision-making? Can effectiveness justify authority without popular consent? The Federal Reserve navigates these tensions daily. It's technically independent, insulated from direct political pressure to prevent short-term political manipulation of monetary policy. But it's also democratically accountable. The President appoints governors, Senate confirms them, Congress can modify its charter. This structure tries to balance expertise with democracy. Whether it succeeds is debatable. Critics from the left argue the Fed serves financial elites at workers' expense. Critics from the right see an unaccountable bureaucracy distorting markets. Both criticisms echo Jackson's attacks on Biddle. The real lesson here isn't that Biddle was simply wrong or Jackson was simply right. The lesson is that both men's absolutism prevented finding the balance America needed. Biddle couldn't accept any democratic oversight. Jackson couldn't tolerate any elite expertise. Their inflexibility guaranteed conflict and catastrophe. When you step back and look at the full picture, what emerges is tragedy in the classical sense. Both men were pursuing legitimate goals. Biddle wanted economic stability. Jackson wanted democratic accountability. Both had valid concerns. Biddle was right that destroying the bank would cause chaos. Jackson was right that concentrated financial power was dangerous. But neither could compromise. Neither could acknowledge the other's legitimate concerns. So they fought to mutual destruction. The bank was destroyed. Biddle was ruined. Jackson's economic legacy was tarnished, and the nation suffered decades of financial instability. The human cost of this political and financial warfare was staggering. Thousands of depositors lost savings when the bank collapsed. Families lost farms in foreclosures triggered by credit contractions. Workers lost jobs in businesses destroyed by financial instability. These weren't abstractions. They were real people whose lives were damaged by elite conflict. What nobody wants to admit is how little the combatants cared about these victims. Biddle deliberately created economic pain to pressure Jackson. Jackson destroyed the bank knowing it would cause financial disruption. Both men prioritized their egos and principles over the welfare of ordinary people who'd be caught in the crossfire. This is the darkest aspect of the bank war. It wasn't really about banking policy or economic theory. It was about two proud men refusing to back down, fighting for personal and political dominance while claiming to serve public interest. Whether we like it or not, this pattern repeats in modern politics. Elites pursue their interests while claiming public service. Politicians prioritize winning over governance. Technical experts resist accountability while demanding power. Democratic processes are manipulated by those who claim to defend them. The Biddle-Jackson conflict reveals that these problems aren't new. The tension between expertise and democracy, between elite management and popular control, between effective policy and legitimate authority, these have defined American politics for 2 centuries. So the question remains, can we do better? Can we find the balance that eluded Biddle and Jackson? Can we have both democratic legitimacy and technical expertise? Can we hold elites accountable while allowing competent management? The optimistic answer is yes. Modern regulatory structures at least attempt this balance. The pessimistic answer is no. We keep repeating the same conflicts with different actors and institutions. The realistic answer is maybe. We muddle through, sometimes getting the balance right, sometimes failing catastrophically, always struggling with tensions that can never be permanently resolved. Nicholas Biddle's story is a warning about the costs of elite arrogance, but it's also a warning about the costs of rejecting expertise entirely. The bank war showed that destroying institutions without replacing their functions causes suffering. But it also showed that protecting institutions from accountability enables corruption. Both lessons remain relevant. When central banks claim independence, we should remember Biddle's corruption when accountability disappeared. When populists attack expertise, we should remember the financial chaos that followed the bank's destruction. The trick is holding both thoughts simultaneously, recognizing that expertise needs accountability while acknowledging that some functions require technical management. That's harder than choosing sides, which is why Biddle and Jackson both failed. 200 years later, Americans still haven't fully learned these lessons. We still careen between trusting experts too much and rejecting them entirely. We still let conflicts between elites harm ordinary people. Nicholas Biddle died believing he'd been right, but unjustly destroyed. Andrew Jackson died believing he'd saved democracy from tyranny. History suggests both men were partly right and largely wrong. Their conflict damaged America unnecessarily. The real tragedy is that similar conflicts continue, with similar costs, because we haven't learned to balance the legitimate concerns both men represented.